Well, good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up, and here we are with the evening edition for this Thursday, the 25th of January, 2025, and the melt-up continues. I mean, the tech stocks just keep running, with the exception of Tesla, which is getting the heck beat out of it right here. And, you got to ask yourself at some point on Tesla, is it a car company? I've argued it is, and I've been wrong on that for a very long time, but I'll stick with what I do. SpaceX is a space company. His Boring Company is a boring company. And Tesla, to me, is a car company. That doesn't mean it can't go further with battery chargers, but he seems to name each of these things a different company anyways, and they fall under the umbrella. So is it getting Mr. Musk's attention, that these breaks? I'm sure it is. He put a lot of money into X, and I don't know if he likes that or not. It was a great experiment. I think maybe he got ahead of himself. A little ego there, could have gotten involved. Who knows? Why does he need to be in social experiments to begin with? He's got his hands full, but we will see where it goes. If you look behind me, it's a sea of mixture. You've got a number of red markets here. All right? They're not all up. I mean, that is the important thing. Stocks have gone up. Tonight, you're seeing a little bit of a correction. GDP today was wonderful. It didn't beat the third quarter, but it wasn't supposed to. We knew it was going to pull back a bit. But we see the inflation pressures are still subsiding as we look at them. We saw the unemployment claims rise in both continuing and initial. That was something that we want to see. We're not looking for us to fall off the cliff, but we want to see that labor gets a little bit hurt. We're seeing a number of, I call them the internet companies now, saying that they're doing layoffs in different divisions, 1,900 here, 1,000 there. These are numbers that are important. We'll see what happens. And I'm not seeing anybody saying, hey, we're going out, we're going to hire this month 1,000 of those people. So that part hasn't happened. They don't have to say that. We'll get new JOLTS numbers very shortly, and we'll see how many job offerings are still out there, and that'll give us an idea as to how that is. But the service sector, very strong. That's holding things up any way you want to look at it, and manufacturing stays weak. Enough said there. I understand the Biden administration is going to announce tomorrow another wrinkle. They're about to do an announcement that new plans for liquid LNG, liquid natural gas, is going to be problematic, that they want to do studies. They don't want to approve anything more. All right. What does that do for everything in the works already? If you have a plant that you're building right now, in Louisiana, that's been going on, does that mean I should close it or keep it going? They're not being very clear on this. It's political. You know what it's about. They'll use climate change as important, and there's an element to that. I live in the city of Chicago. They're putting forth an ordinance that any new high-rise that goes up, and we have them going up, they cannot use natural gas. They have to be fully electric going forward. I don't remember the last time I had a fully electric stove. So that would be interesting if I had to redo my kitchen. And I don't. I just did it in the past 2 years, so I won't be doing that. But these are the things that we're facing, and it's important. But we're here about this. We know that D.R. Horton got hit pretty good. Today you saw interest rates stabilize once all these reports came out, but you did get up in the 10-year to 4.16. You came back down in the 412, 413 area by the end of the day. But this market's taking it on the chin. Is it ready to stop the decline? Don't know. This is a wipeout. No question about it. You've gone for all purposes from 158 down to 138. You fell $20 a share. Like that. You couldn't get out of the way. If you were in that, you got caught as this all came down on you. The market's under the 18-day average. That isn't good. What's supporting the market is pretty clear. It's the Bollinger Band. You got under it for the past 48 hours and you came right back. Coming back and inside of it is not a sign that you have to bounce up. You could do what I call a gorilla glue trade and just latch onto it and work yourself lower. So we'll find out what it wants to do. But right here, it's not trending. This was a washout, created an oversold condition. Now the question is, the look-see. The good news for them, if you look today at new home sales, they were very strong. Now we're going to get pending home sales tomorrow, so you want to look at that. We saw that the European Central Bank came out with their policy meeting today, and they're data dependent. Next week we get the Bank of England and the U.S. Federal Reserve. I assure you, Mr. Powell, based on everything I see, is going to say they're data dependent. The market doesn't warrant at this point in time cuts. That's what I really believe. You're in the Goldilocks scenario. You've got employment still strong, inflation waning. You don't have to lower interest rates to create inflation. That's what you would be doing. So you got to be careful with that. You need it to all work through the system, and they're going to let it work through. Now, at some point, maybe you weaken more. So far, for a past year and a month, 13 months, all I've heard is we're going to have a recession. Isn't that how we started out 2023? We started that way again. And so far, the naysayers haven't been right yet. When we look at uranium, I'm looking at today, it was so interesting, a story comes across. Has everybody looked how much uranium has gone up? Maybe, but I'm not seeing one of the big companies with it doing much of that. I'm seeing just a sideways action here, not really a trend in that market. In the gasoline fund, this is to me a big resistance area. But why is the market up? What's going on? Because the weather's moderating. We're going to be in the 50s next week for several days in Chicago. Why do I mention that? January 30th, 31st, February 1st, 50s in Chicago? I've lived here all my life. I mean, I went to college out west. I've had homes in other parts. I've had offices in California and New York. I travel. I've been around. I've got mileage on me. But 50s in Chicago in February 1st, and it's not a fluke. I mean, the fluke was getting real cold. So climate change is here. It's doing something. You may not agree with it. I think it's real. I'm looking to put palm trees up. That's what I'm telling you. You guys out there, you worry about your coast. You can't get insurance. I'll stay here. Lake Michigan isn't overflowing. We've got the higher highs, higher lows. Everything is just sort of working right here. Still bullish as can be in the financial sector. Overbought, but not giving up on anything. Why should it? I mean, the banking system's looking pretty good right here. And businesses, they want to borrow. Interest rates, I think they're used to them being this high. As long as they don't keep going higher than this, I think we're adjusting as an economy. You saw that in the GDP number. Higher lows, higher highs, but overbought. We have a theme that's here. We're overbought in a lot of markets. So be a bit careful here. How you correct overbought is one of two ways. You either, and this is very important, you either break or you go sideways, you would develop an embedded reading where the momentum starts picking up and you get over 80 and away the market goes. This is an embedded reading, but all the wrong ways you want to see it. This is AMC, and it could be going down. Like I said, the $4 area seems to be a battleground that it's doing. It's 408 right now. It's still in a bear play. When you lose that reading, maybe you get back to the $485 level. But if you're watching Netflix and companies like that, I just got to repeat it. People are staying home. They're not spending money. It's too much money to go to a movie theater. They have to figure out a way to get the price down to bring in the public. It is sensitive to price. I owned one. I know what I speak. This is not like, hey, I was a little bit, I was involved. It didn't do well. And we owned one of those $2 movie theaters. You know what was wrong with that? The people were so frugal, they didn't buy candy. It's what you run into. RSPD. You can see how the market right down here fighting its battle. Now, I get friendly on this if you can get over 46.98, but you haven't yet. Are you bearish? No. You've got the swing line up. You're fighting at the 18-day average. Momentum's trying to go up. If you can get over that, it's saying the consumer, you had your correction, and maybe you're going to go to wherever this number is, 47.40, could be the next zone, about $1 higher from here. Home builders, well, they're sitting, all right? Yeah, we just saw DHI get hit, Horton, all right. But all you did is fall back to the 18-day averages, the group, and they're doing okay. Energy sector, why is this climbing suddenly? China, China, China. There are two big buyers in the world of oil, China and India. And China, unfortunately, under President Xi, everything went down. I applauded him last night. If you'll remember the show, I'm applauding. And the reason is, instead of the window dressing of we're going to buy stock to fool the people in China that their stocks, yeah, they're down, but they're too low, they're going up. That wouldn't do anything. You're just throwing good money after bad to window dress. You got to make the companies better. But when you cut reserve bank ratios and you start freeing up billions of dollars, game changes. And that's why this is up. The market's looking at it that this is first of many steps. I told you that China has signaled all the way through in December when they had their meetings and the Congress met and so on, that come March is when they're going to release whatever they're going to release. Well, it couldn't wait because you fell 10% the first 25 days or 20 days of January. So now they've got the message. They'll do something. In the gold market, you have nothing here. You don't have inflation. You don't have wars to worry about. I've said this over and over. You're just sort of dead in the water for the time being. The trend is down, but you have an oversold market. Any reading under 30, in my opinion, is oversold. Silver came alive, as did the copper market, as did the crude market, as did iron ore markets, because China. These are industrial metals. They'll make a move. Why platinum is acting weak is interesting, because car sales, I guess, are just not picking up the way that people wanted to see. It's got to be the reason. Platinum and palladium are catalytic converters. When you look at the copper market, this is the rally that should now have resistance at the 200-day average. So I think they got their bump in it. I think the market came back, but I would be surprised if you don't see resistance show right now, right here. I'll be surprised if you get up to 38.03. That would bother me, that maybe there's something else I don't get. In BND, you're still in trouble here in this market. It's oversold. The trend is down. It's not coming alive. I'd be careful. TLT still looks like a short sale. The dollar index is drifting. It's got an embedded reading, so it's still bullish, which means FXC is still very much in the bear camp. And so much we saw today from Ms. Lagarde, as she made it very clear that the bank is staying data dependent. And she had to say it during it, I don't know, 5-10 times. The reporters kept coming at her with questions. She kept saying, I don't know how many times I can tell you. We are data dependent. And the data does not warrant us cutting interest rates at this point in time. Everybody wants to see all the central banks go. In order for the central banks to go with the cutting of rates, things have to get bad, or the perception has to be that they're getting bad. Bad means not only are you losing labor, but inflation is already dropping and you can go save the economy. If you're doing it because of labor, in Europe as an example, and you take the rate down but you haven't beat inflation, you're going to fuel inflation higher. So you've got to get the sink. We've done that for how in America is beyond me. We did it, and you got to applaud Fed Chair Powell. I don't know how this will end up. Nobody does. But this is phenomenal what he's done. And, you got to give the man his due. He's held his gun. People say he'll be political. He's not going to be political. I've never seen the Fed be political in my adult life. You'll say they are. They aren't. They're really an independent organization. It's why it's not one person rules the whole thing. They're there, and everybody's looking over their shoulder. That's us. They will stay the course and get what they have to get done. Plus, this is his last hurrah. I doubt he'll have another term. I doubt he wants it. And he's going to go out in a really neat manner. If it were over today, you'd be looking at him as one of the best Fed chairs we've had. I'm Ira Epstein. Remember this, and this is going to be important. We offer an awful lot of information for you. This is just 6 of like 12 of these that if you scroll down, you'll see. It's everything from option strategies, learning about them, getting ideas on them, getting the plays to go with them, charting services. A lot of use other charting services. Try ours, and I think you'll be blown away. Price counts, daily market research, my research, it's all here. So visit it, go to iraepstein.com or move your cursor up here. If you go to iraepstein.com, it's free offers. You have a good day.